Namaste and greetings. I, Tripta Behra, researcher at IMPRI, Impact and Policy Research Institute, Prabhav एवं नीति अनुसंधान संस्थान नई दिल्ली extend my warmest welcome to you all to IMPRI Web Policy Learning. We are gathered today for day 5 of an online international autumn school program, a 1-month immersive online intermediate certificate training course on contours of the public policy in India in the Amrit Kaal. This training program is organized by IMPRI, Center for the Study of Finance and Economics, CSFE. This course will be chaired by Professor Mukul Ashar, Visiting Distinguished Professor IMPRI, former Professor Lee Kuan Yew, School of Public Policy, National University of Singapore, NUS. The panel of conveners comprises of Dr. Devendra Singh, Senior Visiting Fellow IMPRI, Dr. Simi Mehta, CEO and Editorial Director IMPRI, and Dr. Arjun Kumar, Director IMPRI. The experts for today's session are Ms. Urvashi Prasad, Professor Aman Agarwal, and Professor M. Govinda Rao. I welcome all the participants to this enlightening deliberation and thank you for being interested and putting your time, energy, and efforts into understanding emerging issues pertaining to the Indian subcontinent and helping us to bring together the practitioners and participants through this course for impactful policy research and action. We have also shared the course outline and reading resources in your email for your kind perusal. Before we start today's session, I would like to remind the housekeeping announcements once again. Please join the meeting on time. There will be a Q&A session after each presentation. Kindly share your questions in the Q&A box. The questions must not be posted as an anonymous attendee. Kindly ensure that your questions are precise and refrain from making any general comments in order to save time. Now, without further ado, let us start the program. I would like to invite Professor Mukul Ashar to start the program and give his opening remarks. Over to you, sir.
Dhanyavad. Namaste to everyone. Today we have three somewhat diverse topics that will be presented by the respective experts or resource persons. The first is a sort of futuristic in terms of the role of Niti Aayog in the Amrit Kaal. As the term Niti is the national institution for transforming India. So we have been talking in the course about change versus transformation. The idea is that this institution will help in transforming India and facilitate the objectives of the Amrit Kaal. The second topic is how India has achieved financial inclusion. Some years ago, we were among the least banked in the world. Today, we are among the most banked, and the financial inclusion is a case study that a lot of schools, public policy schools, and a lot of multilateral institutions are now recognizing about India's financial inclusion policies. And the third is perhaps a little more technical, and that is about the direct tax, the personal and corporate income tax reform directions. We looked at GST, which was a transformative benefits arising out of GST. Many people feel that right now we are working with the 1961 Income Tax Act as amended, and maybe 61, even though you amend it, it is now time that the kind of effort we put in the so-called indirect taxes, that we start putting it in the direct taxes code. So maybe uh, Govind Rao, who is among the most eminent public finance economist of this country, uh, maybe he will share some insights into it. Uh, so, so these are the three diverse topics, and each one of them is very important for the public policy. With that, I close my opening remarks.
Thank you so much, sir. I would now like to invite Ms. Urvashi Prasad, ma'am, for a session for the role of Niti Aayog in the Amrit Kaal. She's also the Director, Office of Chairman, Niti Aayog, New Delhi. We welcome you, ma'am. If you could please take it from here. Over to you.
Thank you, and thank you for having me here. Yeah, so I'll just speak, for about 15-20 minutes on, the topic that you have chosen for me today, which is on the role of Niti Aayog in this Amrit Kaal. So, yeah, I think, if we look at Amrit Kaal, it's basically the 25 years which are leading up to our 100th year of independence in 2047. And the Prime Minister has essentially, said that we should try and look at this 25-year period just like, the period that was the 20-25 years that were leading up to India's independence in 1947, where, we were able to do a mass mobilization of efforts, which eventually then led to India getting its independence. So this period, he has said, these 25 years going up to 100th year of India's independence, we should see it as significant. And we should try and pull in all our resources, all our efforts towards making India a developed country by 2047. Viksit Bharat is, by 2047 is what he has sort of, outlined as a goal for all of. So I think, that goal, that target is very clear. Now it comes to, what is really a Viksit Bharat, and how would we define a Viksit Bharat? And that is not just in terms of economic parameters. Of course, it's GDP. We are already one of the largest and fastest growing economies in the world. So, obviously it is about further strengthening our economic position in the global arena. So definitely, that is a very important aspect of it. But equally, it is social development. All our human development parameters need to also be significantly improved if we can really say that we are Viksit. Our scientific efforts, our research and development, how we are faring on environmental sustainability, all of these, are very important dimensions of a Viksit Bharat. And essentially, it has to be a society which is attractive, not just for its own citizens, but for the rest of the world. So it has to be a society where there is equality of opportunity, and there is fairness, and there is participation of everyone. So there's many aspects and dimensions to how we would define a Viksit Bharat, and I won't get into that in detail here because that's a topic in and of itself. But just to say that because of this tone which has been set for the Amrit Kaal, Niti Aayog also draws its direction and its inspiration from that. Niti Aayog, as Professor Ashar mentioned, that it's the National Institution for Transforming India. It is the premier policy think tank of the Indian government. And our role is to work not at just the central government level, but very importantly, to work with state governments. Because, ultimately India grows when states grow. And so the focus has to be very, very strongly on states as we talk about Viksit Bharat. So that is one of the, most important mandates that Niti has been given. And in that context, we have actually a few months back, and it was also announced in the union budget, we have launched a state support mission at Niti Aayog, which is going to work with each of the state governments to set up similar institutes for transformation at the state level, similar to what we have as Niti Aayog at the central level. We're going to try and set up, and many states have already started setting up these, what they are called as state institutes of transformation. So that is something that we're going to do. We are going to provide the best of expertise, capacity building, knowledge to these states as they develop their own strategies for this Amrit Kaal. Because, it has to be very clear that there cannot be one strategy for India, right? So, every state is going to have its own strategy, its own development path as we look ahead to Viksit Bharat at 2047. So we're going to, through the state support mission, help every state chart out its own development strategy. And for this, we also have some financial resources available to us through which we are going to support these states and help them tie up with the right kinds of partners, knowledge institutions, so that the best of knowledge that exists in the outside world can be brought into the policy-making sphere. So that's one major initiative that Niti is going to play as we look ahead to Viksit Bharat. The other is that we are also focusing a lot on local governance, grassroots governance. We, as many of you would know, we have been implementing the Aspirational Districts program since 2018. And now, based on the success of that program, we have also launched the Aspirational Blocks program, where we are taking the similar model of aspirational districts to the blocks level, because there are still many blocks and districts in the country which are underdeveloped, and various socio-economic parameters in these blocks and districts need to be performance on these parameters needs to be accelerated. So for that, we're going to, again, be focusing on governance at the local level, on use of technology, on real-time monitoring of data, of key performance indicators. So that is another, very, very big initiative. Then, of course, we are continuing to work on many different aspects of technology use, both in terms of data and governance, as well as frontier technologies, artificial intelligence and others in different spheres, different domains. So that is another, major avenue of work for us. And then we're also looking at how we can really accelerate the achievement of the SDGs, the Sustainable Development Goals, because Viksit Bharat, of course, is an agenda that we have till 2047. But before that, by 2030, we have committed to a whole range of SDGs, right? Not just India, but the rest of the world. But India is obviously a very important contributor to achievement of the SDGs at the global level. So we are really focusing our efforts on how do we localize SDGs across all our states. We are continuing that effort. We're continuing to monitor the performance of states on SDGs through dashboards, through various indices, etc. So that is, again, very, very important piece of the, work that Niti is doing. So really, these are just, some of the examples that I wanted to highlight, whether it's on the economic side, governance, technology, data, monitoring and evaluation, or actual, implementation, where we're talking of, either through the state support mission or through the aspirational blocks program, where we're directly trying to support states. I think the biggest message really is that, Niti's focus is very much on states. And as we look at Viksit Bharat, we are going to work with all the states to help them, set out their own development strategies and path to achieving this Viksit Bharat. And of course, because we're going to be working with all states, we're going to be having these state support missions. We will also be in a very good position to share best practices, learnings from, whatever we learn from one state, we will be able to disseminate it, share it with others. So that is again, very important function that we will be able to perform. So yeah, so this is just to say that, this is how we look at Niti's role in this period. And it is really about channelizing all the possible stakeholders, contributions from all the possible stakeholders. That is something that we as Niti are really focused on doing, because of course we want to converge the different resources available within the government, but we also want to bring to bear the best that is available, the best knowledge, the best resources, the best expertise in civil society, in academia, in industry, private sector, startups. So we're really trying to, sort of act as a mobilizer, a catalyst for all those efforts. Because, again, just coming back to the point, and I'll conclude with that, as the Prime Minister said, that this needs a mass mobilization. If we're going to become a developed country by 2047, if we have to make the most of this Amrit Kaal, all our efforts need to be converged and need to come together. So that is the kind of function that, and role that Niti really sees for itself. So I'll conclude here. Thank you.
Thank you so much, ma'am, for such an informative session. I would now request Mukul sir to provide his views before we move on to the Q&A.
Yeah, thank you for very concise yet fairly comprehensive understanding that you gave on what role Niti Aayog can play. And for the participants, I want to particularly emphasize what you mentioned about data, technology, and knowledge from all sectors to bear on addressing public policy issues, not just at the central government level, but at the state level, and then the district and the block level. Because this is the way the more growth nodes that India has, the more resilient India becomes, and the less disparity occurs in the country. So this is great, and I hope that you succeed, Niti Aayog succeeds in this. How many states have set this up, the support system so far?
So the state support mission, I think it is, set up right now in about, I think, 5 or 6 states have already established it. But there's at least another 11 or 12, which have reached out to us for support. So they are in the process of, setting it up. So even though it's a fairly new program, actually just launched earlier this year in that sense, and, announced in this year's budget, but we're already seeing, good traction with this. So, hopefully it will pick up a lot more. Yeah.
Are you able to share the name of 5-6 states that have set up?
Yes, I should be able to. I'll just share that with you shortly.
Okay,
Yeah.
fine. Now the participants may have questions.
So we have one person who wants to ask question. Soumyaji, you can go ahead.
Yes. I guess.
Your voice is not very audible,
Yes.
Soumyaji.
Is ma'am there?
Yes, yes.
Yes, I am here. I'm just looking up the names of the states that Professor Asher asked. So let me just answer that before I come to your question. So the SITs, which are the State Institutes for Transformation, they've been established in Karnataka, Uttar Pradesh, Maharashtra, Assam, and Meghalaya. And the states
Okay.
which are currently working with us to establish are Rajasthan, Puducherry, Chhattisgarh, Chandigarh, Nagaland, J&K, Tripura, Goa, Dadra and Nagar Haveli, Delhi, Mizoram, Sikkim, and Arunachal. So, yeah.
Thank you very much.
Yes, please go ahead with your question.
Hello, ma'am. Thank you for your words. I was asking that I'm an economics student, and I wanted to know how Niti Aayog really solves a problem. When you look at a problem, what
Yeah.
all the work you do with that problem to make a policy from start to end, and what is the different in Niti Aayog that was not before? What is the unique thing that has come in this recent years?
Okay, so yeah, so basically, in terms of if I see, I'll answer your second question first, that, what is the difference? So Niti, earlier we had the Planning Commission, and a very major role of the Planning Commission was in, fund sort of allocation to states. And of course, preparation of the 5-year plans. So that was something that the Planning Commission used to take the lead on. Now with Niti, what was felt increasingly that there was too much centralization, and that is something that was increasingly felt in our whole planning process, that India is too diverse a country, and our states are of the size of countries themselves. Uttar Pradesh is, if you look in terms of population, it would come, fourth or something in the world, right, in terms of population. So Uttar Pradesh is, you can't really say it's a state, it's a country by itself. So you can't sit in Delhi and plan for everybody, and that was a kind of criticism, a kind of shortcoming that people started finding. So that is where Niti was actually born, where we say that we don't necessarily have the power of funds, although as I said, in some cases now, like with the state support mission or with the aspirational blocks program, which are actually directly implementation oriented, we also have some funds with which we are supporting states and districts and blocks. But the power of funds is not our biggest power. It is the power of ideas. And that is really the genesis for Niti, that we transform India through ideas and through best practices. And these ideas, like Professor Asher also summarized, these ideas come from academia, they come from private sector, they come from civil society, from all possible, walks of life. So Niti is in that sense different. That it's not the money which is the biggest power or instrument for us, but it is really our ideas. And of course, there is a role for us that we have to work with states. So we have to undertake this kind of decentralized development of strategies, instead of having a very centralized planning approach. So that is the difference. Now, in terms of how we go through a policy process, that is of course a very complicated question. I mean, there can be an entire session just on that question. But but I'll just say that I think that firstly, there's no one size fits all in this. It really depends on, what is the situation, what is the problem you're dealing with, who are the stakeholders involved, right? Who is your policy going to affect, either positively or negatively? I think that is a very important thing in policy making, that it's important to think of both intended and unintended consequences, right? So potentially unintended consequences that your policy might lead to. So I think thinking about your stakeholders, thinking about who's the beneficiary, or the sort of end recipient of that particular policy, program, whatever scheme that you're designing, and of course, then you have to think about the funds that are available to you. You have to think about the technology available to you. How will you deliver it? Who will be those, who will be delivering that program or policy? What are your intended outcomes, goals? So there's a lot of things that go into thinking about a policy or a program. Many different elements. And yeah, I mean, if I have to do justice to that, then I have to do an entire session on that.
But we have some sessions earlier we did on policy making.
Yeah.
We will share those. We have a lot of questions. So shall we club 2-3 questions together?
Yeah, there's a lot of
Right.
questions.
Yes. So those who can speak can go first. I'll go with Tejas ji, Subhendu ji, Amrit ji.
Yeah. Hi,
Okay.
Arjun sir and Urvashi ma'am. Good evening. This is Tejas. I'm from Mumbai. I'm quite regular on the NITI website. I've been browsing through the resources for quite some time now, and very lately I observed that there was a quite a lot of recruitment done from the private sector, probably for people who are having technical or domain expertise across the various lot of sectors that we are looking at. Uh, how does NITI, plans to take this forward, wherein probably there is much more active participation from the private sector? Does it have the resources to take it across the various states, or probably the central government for that matter?
Shall we take?
Yes. Yeah. Okay. No, go ahead. Go ahead.
Okay. We can take 2-3 more questions. Okay. Now, Shreya ji or Amrit ji, you want to go ahead? Ashtuti Roy ji, Rahul ji.
Yes, ma'am.
Yeah,
Hello,
Rahul.
ma'am. Rahul, turning from Kolkata. As you mentioned that NITI Aayog aims to mobilize all stakeholders in the policy making for Amrit Kaal. How can the youth get involved in the process? You can kindly elaborate.
Very good question. Ashtuti ji. Yes.
Yeah. I'd like to go with my question. Good evening, ma'am. I am Oishiduti from Kolkata. So I wanted to know that there are certain instances where we see that state governments are not cooperating with development projects which will actually benefit the state, just because they are maybe central government schemes or private sector schemes which are beneficial to the central government as well as the state government. But due to political differences, the states are not willing to incorporate them. Hence, the states are not really being in par with other, say, more wealthier states. So I wanted to know how NITI Aayog or similar think tanks actually do the tremendous task of actually convincing these states to incorporate these development models.
Complex question. Yeah. Ma'am, over to you.
Yeah. So the first question, I think it was on, private sector and recruitment, etc. So, I mean, one part of it is NITI itself, bringing in the best of expertise from the private sector. And that's what you would see on the recruitment side, that we are encouraging a lot of people to join as consultants who have, domain expertise or technical expertise, because, that is what we are going to offer to the states, to the districts, to the blocks. So, we need that kind of expertise in-house. Of course, we also partner with a lot of organizations. So, expertise that we don't have in-house, we supplement it, by partnering with others. So that is another model. And for the state support mission, we are going to specifically have a team of experts housed both at the central level as well as in the particular state, which is going to work specifically on the state's development strategy. We're also going to have a tie-up between the state, kind of institution for transformation and a lead knowledge institution in each of those states, right? So this could be a state university, it could be an IIT, it could be an IIM. There is going to be at least one lead knowledge institution in each of these states, which is going to also provide expertise in different kinds of areas that are required for developing the state strategy. So that is really how we are thinking about this whole bit of private sector expertise, capacity building, etc. The second question was on I think it was a political economy question, that if states don't implement what we would like them to. Now this is a very complex question. It is a political economy question because yes, of course, political differences do play a role. But I think there's a couple of things here. I mean, one is that ultimately, in the kind of framework within which Niti works, we don't compel, or we're not in the business of compelling or forcing any state to do anything, right? And this comes back to my point of decentralization, where a state chief minister is I think much better placed, right, in that sense to be able to decide what his or her state needs and is best for them, right? They are the politically elected representative there. So states are too large, in our country for us to dictate terms from New Delhi. So we don't dictate terms, but yes, certainly when we feel that a certain reform would be beneficial, a certain program would be beneficial, then we do try to work with the state government to obviously try to convince them to adopt it. But it's more a process of negotiation, discussion, and trying to get them to understand and see the sort of the best sides of that program or reform, rather than any kind of instrumentality which compels them to do it, because that is very difficult in a federal structure like ours, and it's very complicated, and it can have many downsides as well. So that is really on that question. The third question I'm forgetting. Can someone remind me what was the third question?
Oh, Ashwin asked that question. Tripta, would you like to repeat it?
So I'm not very sure myself.
No, it was West Bengal, that when the state do not cooperate, or how do you handle the different federal and electorate system as well?
That I answered. I think there was one more I've missed.
Mm-hmm. One was from Rahul ji, and he was asking that how youth can incorporate.
How youth can. Yeah. So, I mean, youth, again, there's no one way. There's a lot that, can be done. And in different sectors, there's different kind of roles that youth can play. But I think from, the way we see it, and in the work, a lot of the work that we have been doing at Niti, we are trying to, involve young people in a lot of our different programs as really champions of change. Like these, young people are the ones who can break a lot of the, social taboos and norms which are holding us back. And so these are voices which can really help us take our progressive messages forward. And so whether it's in health, whether it's in education, any kind of area, we are really calling upon youth to help us spread these messages and really be that champion of change and that agent of change. So I think that is probably the most important role that youth can play, because their voices are very influential and their voices are strong and powerful and progressive. So I think that is perhaps, the biggest contribution that, in a way that youth can make.
Okay, right. So let us take next round of questions. Suvendu ji, then Amrita ji, then Shreya ji. Suvendu ji, yes, please go ahead.
Sure. Hi. Hello,
Please.
madam. Greetings, and it was wonderful to hear you. My name is Suvendu Chand, and I, deal with digitization and digitalization of several banks as a part of my profession. I'm based out of Bangalore. Time to time, Niti Aayog has actually published the directives and great guidance in terms of how do we increase the adoption, regulate the digital banking in India. So could you throw some light on the latest, thinking around that, and how do you foresee and envisage to strengthen an adoption of digital banking in India among masses? Thank you.
Okay, Amrita ji or Shreya ji, would you like to go next? Yes.
Yeah.
Yeah.
Good evening, ma'am. Thank you for that insightful session. I had two questions. One is, what is the bilateral communication strategy for Niti Aayog to disseminate the best practices and the insights to the ground level for the local decision makers, as well as collect the insights from the ground level? And the second one was, do you foresee a greater decentralized monitoring and evaluation mechanism at the state level, considering that it is not robust across the states with the oversight of DMEO? Thank you.
Okay, and last question by Shreya ji.
Good evening, ma'am. My question is pertaining to the fact as to, do you see Niti Aayog making cooperative federalism a reality? And my second quick question would be, is Niti Aayog more powerful than the Planning Commission? Or, as you say, Niti Aayog is not forcing anybody to do anything. So I want to know, is Niti Aayog as assertive as the Planning Commission was, or what is the different avatar that it takes? And a third quick question would be that at the grassroots level, ma'am, is there more scope for the local self-government and the people in the rural populace to contribute towards innovation and creativity and really deal with their problems? Do they have a voice, a greater voice this time? Are they being listened to more by Niti Aayog in comparison to Planning Commission? Thank you so much.
Too many questions. One more question is by Gulab Bhai Rohit ji, and he's asking that how does Niti Aayog tackle union territories, which is very good question. Niti Aayog works a lot. Urvashi ma'am, over to you. You can choose to answer any question you like. Yeah.
Yeah, there's a lot of questions. So, I think so on, Niti itself, cooperative federalism, or working with states, UTs. So like I said, I think it's not about whether Niti can make anyone do anything or not. It's more about, like I said, your power of ideas, right? And your power of persuasion. If your ideas are good enough, and you can convince the state governments that your ideas are good enough, they will get traction. And we found that in so many cases, right? Whether it's the aspirational districts program, so many examples of initiatives, reforms over the last several years as well, whether it's in nutrition, Poshan, whether it's in sanitation, with Swachh Bharat. So it's about making sure that you have that power in your ideas, and they are good ideas, right, that you're trying to spread, and you have that power of persuasion. So that is kind of one aspect of it. And the other, of course, as I said, is that the whole federal structure. You have to respect the federal structure, right, and the structure in which we operate, and that is what we try to do. That states must have a very big say in what happens. It cannot be a centralized narrative. It cannot be all dictated from New Delhi. So that is something that I think is what has really led to kind of Niti Aayog coming into being, and the kind of principles that we try to follow. So obviously that does make for more complex, policy making. It does make for more complexities in implementation of reforms. Definitely, right? It would be much easier if there was just one agency, perhaps, sitting at the center deciding what is going to happen in the whole country. Perhaps it would be much easier, but that is not how our federal structure operates. And that is also perhaps not desirable for a country, of our scale, our size, our diversity. So that is, I think, the whole point that I was trying to make there. In terms of, I think there was a question on monitoring data, data and monitoring evaluation. So yeah, again, what we are doing with monitoring and evaluation is not just at the central level. So DMEO, of course, monitors programs and schemes at the central level. So what, the central sector schemes as well as the centrally sponsored schemes. But we are also now building capacity for data collection and monitoring at the state level. And that is happening both through the state support mission as well as through the SDG localization efforts. I spoke about the SDG localization, where we're trying to take the SDG framework to the state level and to the district level. So through these efforts also, we are trying to improve the whole process of, data collection and monitoring at the state level. So that is a very important aspect. In fact, we've also come out with SDG indices for specific regions. Like there is an SDG index for the Northeastern region, because the Northeastern states have very specific kind of requirements and challenges of their own. So, we came out with an SDG index just for the Northeastern region. So we keep doing these, very region-specific, state-specific kind of analyses as well, because, that is what we feel that we need in India. There is no, one-size-fits-all that works here. So that is, really the second set of questions. The first question, I think, was on the digital banks, etc. It's not an area I'm very familiar with, so I would not be able to update you on all the sort of recent things or technicalities of that, but happy to connect you with someone in NITI who can actually update you on that. And I don't know, was there anything else? I think I answered most of the questions.
Thank you so much, ma'am, for taking out time to answer all the questions.
Yeah, if there's more questions, I mean, I'm happy to, you can just email me. I'm happy to connect with anyone on email, or I can connect them to the concerned person in NITI. Yeah, so I'm happy to do that.
Surely, ma'am, so kind of you. Thank you so much. I would request Mukul sir to give a description of our next guest.
Thank you, Urvashi ji, first.
Thank you.
Thank you. It was a great session.
Thank you.
The next speaker, I have to describe him as a good friend, Professor Aman Agarwal. We go a long, long way back, and Aman is what I would call a true academic entrepreneur. And the entrepreneur is the one who takes risk, who sees opportunities, who seizes it. And in his case, he is also an excellent mentor to a lot of young people through the kind of research conferences, others, and the journal, Finance India Journal, is globally well known. Aman is the editor. And so I have a lot of respect for Aman and his family as well, family members. So I'm particularly grateful for Aman to accept our invitation to share his thoughts on financial inclusion.
Thank you, sir, for such a nice description. So I would now like to formally invite Professor Aman Agarwal, Professor of Finance and Vice Chairman, Indian Institute of Finance, IIF Greater Noida, to give the participants a deeper understanding of India's recent policies towards financial inclusion? Over to you, sir. Thank you.
Thank you for that warm introduction. Good to see you, Mukul.
Yeah.
I thought I missed your first. In any case, I will get the link for it, and I like to listen to your address as well. It's always good to be where Mukul is, and although many times we do not agree with certain points, but that's what academics is all about. Today, as the topic was given to me, I hope you're able to see my slides.
Yes, sir. It's visible.
I will not be reading through or going through all these slides, but I'll brush through some of them, and then I'll leave the presentation and I'll email it to Arjun. Then he can, if anyone is interested, Professor Kumar can then accordingly circulate it. This is something we have been working on at the institution for good 30 plus years now on different fronts. So whether it's a question of money laundering, whether it's a question of inclusiveness, whether it's a question of even self-help groups creating frameworks and structures. And today I would like to bring forth to you some of the Indian policies through some recent documentation and frameworks which are there. Instead of just some documentary framework, which is already there, if you go to the government website, you can go through those documents and see what they are in principle and exactly what the requirements are. I was not very sure if you wanted that in specific, but I thought I will entail some of those in the recent policy frameworks and how they're actually getting linked to reality and policy making within the government and even globally. So I tried to coin the topic on Indian policies towards financial inclusion, looking at the SDGs, the G20, the budget 2023-24, which is a pathway for going forward, and then India at 100, which is the Amrit Kaal framework, which is providing for the growth story in India. In any case, as I learned when I was there at the World Bank, these works are based on our research works and our thinking and processing, and not to do anything with either the country or the institutions I represent. As I'm going to go through the brief presentation here, I will focus on these following points where I talk about the growth story, the historical perspective today and tomorrow. As I said, many of these segments which are in details, I leave them because this presentation has got added up and it's more of a 2 to 3 hour session instead of about half an hour to 35 minutes. So I'm going to curtail some of them, which many of my Indian colleagues might know and have witnessed themselves. But I would like to fine tune and go to also the issues like the budget, the recent research works on the World Economic Ranking, which we did through the FinTech vertical option, the digital rupee and the G20, and then conclude our session for today. So you all are aware of the SDGs and the way India has been progressing. If you really look at the policy framework of the current government, although the Indian government has been focusing on this in the last 20-25 years now, it's not that they have not been focusing since the UN brought it up, but then we did not see so much of results coming up for multiple reasons, change of political parties. We also saw world economic crisis, which took place in 2007-8, and then the building up of NPAs and other situations which happened despite the fact that we had a very strong central bank governor who is respected worldwide for his decisions and is respected in India as well. So despite all those conditions, we did see conflict which was there in some of the ministries and structures which did not put forward the policy frameworks and the policy structures which were created by the previous governments in power between 2002, 3, 4, going to almost 2013-14 to actually bring in the fruits for the SDGs, which have been well laid out by the United Nations. But then it's not that we did not do any efforts. The efforts were already in place, policy framework structures were already in tune. It was a question of lacking of action, and that was primarily more due to the discords which were there between different policy departments or ministries, which could not be there. Which this government, at least in 2014 onwards, had a single stand framework, which was looking at that growth component. And we can see the pace and speed with which the advancement and action plans which have taken place in some of these itself have happened in the country, and so on and so forth. But if you look at, it's important to understand the Indian history and the way India has grown. If you look at the structure, we have had the inclusiveness, or what Aisha Ahluwalia at the ADB meetings called the inclusive growth component, in wanting to introduce that inclusive growth, which was very complicated because when you talk of inclusive growth, it lays on so many parameters, but it doesn't really help us identify and, quantify that inclusiveness because it takes into account almost everything which is there. It's something which we say in finance when we move from profit to wealth generation, from wealth generation to shareholder wealth generation, and from shareholder we go to stakeholder wealth generation. It is very difficult to go about quantifying the stakeholder wealth generation, although in concept and structure we know very well. And similar was the case with inclusive growth. But fortunately, from therein we got the journey of the financial inclusion, and that's where we did see a lot of change happening. And this is, I would say, coming back to the way we have had the framework in this country with the old civilization of an inclusive development going from the very old centuries. Nothing to do that it's just happening now, where it's a question of trade, spices, woolens being introduced to Europe. Why am I talking about this? We just had G20 happen, and India was very well appreciated. The commensurated, the connect which was there. Countries coming from different parts of the world, the African Union integrating with the G20 now and being one of the members now. Certainly all these things were there. But is it something which is happening now? Is it something which we're learning today from the Western world? It is not the case. Whether it's a question of trade or labor, we actually have had these frameworks and structures in place. There is this new pipeline, the structure which is there, the corridor which is getting created. I was the other day on television. I said, this is not something new. We had the framework which is there. And I think integrating these economic powers instead of creating the OBOR framework is something which will empower it to move much faster, and which we have seen in our historical framework. Not to mention, and it's very critical, in my opinion, for all financial economists and economists to actually go through Chanakya's Arthashastra. If they have not gone through it, it's a mandatory book. It's something which I always give to a foreigner whenever someone visits me from overseas in my institution. I've got multiple copies of it to be gifted because I refer to him as the real father of economics and not Adam Smith. What he has written, not only from a kingdom perspective, from an individual perspective, is even valid today. And his work actually talks about that inclusiveness, which is required in terms of policy framework, which India is now looking at. In any case, as I said, I will skip some of this. I just wanted to show you this graph. This graph I have used in some of my presentation actually shows the growth, and it was from the economic survey, which India and China have entailed going from 78 to almost 2014-15. And as you can see, India actually started turning up, but then we did not go up. This was the projections which were there. We are almost, barging up a little bit, although we are the fastest growing economy in the world, but we have been barging up and down even after 2014-15. So just to say that, what policies are laid today in 2014 or 15, or this government is doing, is the only way forward, I would say it is not the case. We've had the slow and progressive development, whether we had Planning Commission, whether we had Niti Aayog, or whether we had other similar task force and think tanks, which have been functioning in this country in terms of producing and supporting policy framework of the country and taking the India forward. But this is critical because we did project that we would move and China was moving down. China still down, going down. I've had the opportunity to address the MOFCON, the Ministry of Commerce and Finance, the minister and the deputies there for almost about 3 to 4 hours on India about 4 or 5 years back. And meeting them and some of the other top policymakers, it was very clear that the clarity in terms of going forward is not there. Now, why do I bring in India-China perspective? Because typically everybody tends to compare India with China given its size, although they are two different animals. One is an autocratic country, another is a democratic country. The pace of growth and structures and inclusion is quite different for each of these countries. But the model which India has followed as a mixed economic framework has certainly reaped fruits, and we can clearly see equitable growth and development which is there. And I'll show that coming forward in one of our research, which we are currently doing, and the results are going to come out in the next issue of the journal Finance India, which Mukul mentioned. Now, we are a youth population, and that's where, inclusiveness or financial inclusion is critical, because we are looking at a young race which is digitally empowered. We're looking at a young race who is not wanting to only service India, but even institutions and organizations globally. And that's why we need to have policy framework engagement and structures which need to empower these people accordingly. Although, as I said, many studies are there which really look at agriculture at 68% and 72% with the agriculture and agro-based industries. Agriculture still remains to be fairly a very key component for the whole growth and development of this country. However, we cannot say that agriculture is not growing globally. The export level in terms of the kind of the organic agro-based production, which is getting exported to Europe in particular, and given the fact that there have been disruptions because of the Ukraine and Russia war, India is becoming a food buffer framework to meet the needs of the food security globally, which is happening. And that is partly because of the inclusiveness or the financial inclusion power, which is on the table, given the framework created by Reserve Bank of India and the Ministry of Finance in particular, which is very much in tune and tandem. We saw that disturbance. That's what I was mentioning earlier, that the previous government had put a lot of policies, whether it's a question of CPI being one of the bases for calibration of inflation, or which was done almost after 60-65 years of India's independence, but from moving from WPI. But then even then there were a lot of disconnects between the central bank and the ministry in the previous terrains, and that's something did create discords for effective policy to be implemented in terms of financial inclusion. If you really look at today, most of these factors are troubling around the world, whether it is inflation or GDP numbers or per capita or PPP, or whether you look at even savings rate. You look at the country, whether you look at UK, US, Japan, Canada, any European nation in particular, all of these regions, when we're comparing, I'm not saying that we are a developed country. Are we wanting to be developed? Too far-fetched an idea to go forward just of now. We have too many challenges to look forward to. But certainly, most of these parameters are very much under control, given the fact that the government had kept fiscal spending in tune and did not allow it to roll it out completely. Also, the 5-year rolling plan, which was initiated by the government way back in the 1960s, has been reaping its fruit. And with that, we saw the Niti Aayog, although the 5-year rolling plan, in terms of informal planning, still goes on. I think it is something which is very good, because we even teach it in finance to our students at a personal level to introduce a 5-year rolling plan for their own growth and development, instead of only looking at a macro. Even at institutions or unit level, we've seen this plan really working well. However, as I said, the policy framework needs to come into frame for the Generation Z and the millennials, keeping agriculture as a focus and services sector, which have been key frameworks. In any case, in these, we've had a lot of positive outlooks. We've had growth factors come in. We have had Indian firms in international markets today. We are looking at stock markets, intertrade happening. Ukraine-Russia war is, not good for the world at large, but has been, I would say, fortunately, unfortunately, benefiting India to some extent, in the sense that we have been able to, as a result of the Ukraine-Russia war, we've been able to move to a rupee dominant structure in terms of trade, wherein we have again started trading on rupee value, which was not the case earlier. Why is it important? Because that makes India's rupee has been an international currency from 1978 onwards. We've had it freely floating since then, so 1950s, 45 and 50s onwards, but as a floating currency from 1978 onwards. But its due relevance, despite it being a reserve currency, has not come in place. However, now with the frame, with Russia moving to rubles as a framework, then India moving to rupee, and now with the rupiah, which came into picture as a card against the MasterCard and Visa, challenging their dominance and framework and structures, clearly brought in the strengthening of the Indian financial sector and the network connectivity they have been able to create to the last mile, which is critical. That means you're able to reach the poorest of the poor. And in my opinion, the framework and the interest which was there in G20 was also servicing the last mile person, keeping the Gandhian view in framework. So in my opinion, the Ukraine-Russia war had been a tragedy for the world at large, for humanity at large. However, to India as an economy has created opportunities for growth and structures like some of the other countries around in Europe as well. I feel on a positive note, the financial framework has got strengthened and the need for it has gone further on in terms of trade and framework. When you look at the oil crisis, inflation, and what we are going forward, again, is a critical component. India not only is moving towards green tech and wanting to frame green tech frameworks and structures, but we are still far-fetched from the way most countries, because I remember way back in 2010, I addressed a green tech forum in Canada, invited by the Canadian government there, and that had over 3,000 plus green tech, green and clean tech companies functioning both from the United States and Canada, primarily who were participants of that government framework and meeting. And given that we are still, I'm talking of almost about 14 years back, I think we are still a little far-fetched away from that green clean tech. But when it look at the oil crisis, we have been able to stabilize, we have been able to create a buffer, which is there, the oil pool account, which was suggested by us way back in 1989. The government created that oil pool account and which is able to service. The US strengthening dollar and the US interest rates have also helped in a way strengthening the financial system in India. The global recession in any case is a worry and we do not know. The G20 summit points I will raise in another 2 minutes or so. I will spend another 4-5 minutes on some of the research works and developments and how they are actually talking about the inclusion and how it has been impacting the Indian policy making decisions and how they intertwine with the international work which is being done. So people think that this government has a particular mindset. I would say no, it has looked at some of these aspects. And this is something which we have been projecting from 2002 or 3 onwards in various works of ours, where we've been saying that it has to be a mix of technology, environment, and human capital, which will induce sustainable development, which will have to be bounded by appropriate financial resources if you really want to look at employment, growth, and well-being of people. If you really look at the last year's Nobel Prize, which was on banking, financial inclusion, and human well-being, talked about research in banking and financial crisis, again, the previous work. So we can see the last few Nobel Prizes which have come out. We talked about the one previous to that, where David Card and others got it. We saw the labor markets and again, human well-being, where they talked about how contribution of labor economics, the methodology contribution of the causal relationships has to be intertwined. And if you really look at the policy framework which government of India has created, whether it is a question of Jan Dhan, whether it is a question of Rozgar exchanges, or it's a question of other platforms which they wanted to create and policy framework which they wanted to create, they have been influenced by some of these policies. If you look at what Paul Greenman and Wilson talked about, was actually again talking about the common value, the money, accounting, knowledge, and again the human well-being which was there. Again, all of them, if you really look at their works, talk about the way financial inclusion has to be brought in. Now, Abhijit did talk about global poverty alleviation, but then he talked about an experimental approach going from the bottom up. And if you look at this government, whether it's a question of Ujjwala Yojana or whether it's a question of, talking about people framing structures of, creating accounts, post office banking, which I suggested way back in 2008, 9, 10, and even 12 at the Lok Sabha television, they have been trying to put forward a structure where direct benefit transfers, direct rupee, which if I remember correctly, Rajiv Gandhi said way back in the early 90s, 89, 1991 or so, when he said that if government spends 1 rupee, only about 8 to 10 paisa reaches the end user. This government has tried to create and deliver. Creation started taking place in the 2000s itself. So the framework started working on, but the previous governments could not still deliver that direct benefit transfer. So in my opinion, this experimental approach of doing that, we saw that it happening in healthcare. I think the humongous task which took place with the vaccination drive was a clear indication of how they're looking at. So they are also looking at these approaches. We may have Abhijit not talking so good about the Indian economy per se, but then his work is very big, being recognized and is looking at. Then we also saw William Norman talked about something which we did from 2003 onwards, where they again talked about integrating climate, technological innovation, long-run economic growth curves. And we could see that as a framework in G20 summit as well, in terms of decision-making, where you did not want to leave the African unions at all with the development which is taking place, where you did not want to interlock countries for energy to be and food resource to be a lock-in, because this new corridor which is getting created is going to help Europe in terms of creating that framework. So there have been these innovation structures which are being created to bring about. So I'll skip some of these works. In any case, these are some of the works which we have been going through and looking at. In any case, we also saw that India has, in the last couple of years, gained that mutual respect. Today, irrespective of who the prime minister is and which country we are looking at, even if those countries are opposing countries, they welcome India and the prime minister and the government to come and work with them. Even if they're fighting with each other, they welcome them together. And I think that is something which is critical in terms of inducing and taking care of some of these challenges which lie ahead in India in terms of going forward in policy making. Now, I'll spend another 5 minutes. I think I have 10 minutes or so, 5 minutes on the budget, and then move to the final crux of two of our research works. And then move forward. So this budget, which we are seeing last year budget, 2022-23, and even 23-24, both are in continuation to each other. They talk about that transparency, accountability, and sustainability. They are trying to add these wings to India at 100. How much they will be able to do or not is critical. Now, many people have talked about, budget being an affair of a day. Yes, usually it is an affair of a year, which is supposed to be there. But then when you have to make projections, as we talked about the award winning on long run curves, which was talked in the Nobel Prize works, which is on the long run economic growth curves, they have to be built on short term economic curves. And for that, we need to have budgets which are not for today only, but which give projections for tomorrow as well. And that's where it's important to look at the direction in the future, which this government has been able to provide. I remember I have been meeting large number of industrialists at the OECD meetings, the ADB meetings, and the World Bank and IMF meetings, which have been going for almost for last 20 years now. And many of them used to complain in the past that we do not know the direction in which we are going to go tomorrow, because the government may change, the power may change, and what will happen to which forward are we looking at? Because we are only getting a year, 2 year synopsis coming through the budget and some of the other documents. This was something which Professor Agarwal had proposed in terms of budget time change. Again, not we want to discuss this today. These are something which you've already seen happen and which is happening. Again, I'll skip this slide in the interest of time. Again, I wanted to focus on some of these issues, but we are seeing progress and growth. And today we are seeing inclusiveness in all of them, whether it's a question of national security, whether it's a question of healthcare, whether it's a question of women, whether it's a social welfare. All of these are seeing they are policy framework created by the government of India to foster and provide for each one of these segments individually amongst the policy frameworks. Again, the budget has provided for some of these frameworks. We've talked about how we can empower. I'll skip some of these frameworks and I'll share, which you can see. This is critically important because education, in my opinion, is very important. The other day also, we had some government officers with us for a debate at the campus. And there was an important framework which one pointed out that the government must look at someone who served the Lok Sabha Secretariat and then also served the Delhi University as a registrar for a long time. It's been with us for a long time again. He said it's important for governments to look at education, then healthcare, and then people's welfare at the end of the day, instead of looking at everything. And this is where I think the government has tried to create to reach the last possible mind, which is there. I'll skip some of these slides and like to move to the last two components so that we can conclude in another 5 to 7 minutes. When we look at financial inclusion, it is that we want to have everybody. It's not something new. If we look at the world charts, it has been, this is one of our works, which we tried to look at the world economic, ranking based on the fintech vertical options. But what we really saw was in the recent work and even the previous work, that there have been large number of policy frameworks. There have been large number of documentation which have been done in the last 20 years, including projects and reports by the World Bank, the IMF, the ADB and all. But the last mile person is not benefiting at the end of the day. And that's where it was important that these fintechs come into picture, because they were small firms which could actually lead. And this is where the IMF and the framework in the United Nations said that maybe the governments are not able to reach, but let the fintechs try and growth. And that's why we thought about doing this work about 2-3 years back, which got published last year, which was where how do we actually go about supporting that potential growth and poverty? In India, State Bank of India, till about 15 or so years back, would even finance 1 rupee loan. That was there in their framework. So if someone wanted to run a rickshaw and take a loan of 5, 10, 15 rupees and then rent that rickshaw and run that rickshaw, many people could do that. That was feasible. The cost of the loan was much higher, but then it was feasible. But then over time, because of the cost overruns, many banks and financial institutions stopped that. Fintech today provides that power and facility to go about and introducing that potential growth and reducing the poverty framework which is there. So when we looked at this, about 1.7 billion people have had no access to bank accounts for a long time. Jan Dhan Yojana helped create that framework. Would it really make a difference whether those accounts had money or not? Yes, in due course, and those accounts have money, because I feel that demonetization also, which I'm not showing in this, we did some work on that. We clearly show that demonetization empowered the poorest of the poor. Because today and before, when a poor went with 100 rupee or 200 rupee saving and for the whole day work, many a times it would get looted, or his friends will come. It will go in all kinds of odd activities like drinks or games or and other things. However, today, most of this framework, whether we look at a shoe mender, whether we look at a panwala or a tea maker, most of these are taking through UPI frameworks, and these land up in their accounts. I'm not saying that all the ills have gone away, but at least it is safer. If someone loses 100, 200 rupees, even if he approaches the police, whether it is in Delhi or UP or any other part of the country, the chances of the police helping him was very low, because the amount really meant nothing for them, but it meant a lot of money for them. So in my opinion, when demonetization happened, it gave a lesson to these people to move to the digital platform, which no education could have done. You can look at stock markets, you can look at National Stock Exchange, you can look at others trying to educate people to move on the share markets and mutual funds and others, and they're unable to do, despite the extensive expenditure which is done on by them and other agencies and institutions, educational institutions like us also. But this one jolt of demonetization moves this large chunk of the segment, which people in the 70s in the United States, MasterCard and Visa, if you look at their annual statements, you can find that they said, oh, we will digitalize, we will make it a plastic way of money, even in the United States, where even today, 40 to 45% is cash floating in the markets. They could not do it. This has done it at least to a level which was so there. So in my opinion, this is important that fintechs and other frameworks come in, and we found it. So again, as I said, I will move on, skip these components because the studies are there. You can look at the paper which is going through, so we can see how inclusion of India and others has happened and growth has taken place. These are some of the variables which we had taken in terms of doing this study based on the US UN model, UNDP index development model, which we use for the creation of the fintech vertical exchange. And we found the results with the high rank countries as this. India also was fairly lower in the HLN. I will show you a little later because I'll have to change the slide, but India came out to the 98th rank. So to feel that we have done extremely well, no. We have moved swiftly in the last 3-4 years, yes, because there's an action-oriented plan, there is demand, like this government even now said for the corridor, we want to move it in another 2-3 months' time. Let's discuss whether it's virtually, how are we moving forward? Now that action orientation is critical. If you look at, and then we have done this recent study, which is there, as I said, is getting published in the next issue, which is on digital rupee, digital payment and financial inclusion. We have had a sample across the country, and we have had some from overseas as well, but mostly across the country, from the poorest of the poor, like maids, servants and all, students, even teenagers from 14-15 years to going to about 78-80 years, people, professors, academicians, government officers who have been part of the primary data survey which took place on this framework. And we were able to come out and find the results, which I will not be disclosing as of now, but we were able to find out of these 997 survey-based structures, we found that the people are very enthusiastic today. When we did a similar survey almost about 8-10 years back, people were repulsive. They were not sure, they were not clear whether we should go in for digital framework, should we go in for other activities where it involves movement of funds through the banks, whether it was a question of SWIFT or NEFT or RTGS or others. But today they want to do it. They're looking at it. So it's not only the youth, but even the elderly, which is the generation which has worked in creating this India today, has still the dean and desire. And I think that is something which I feel is real financial inclusion, when the bottommost or the junior-most person, whether he's rich or poor, again, and the topmost person, whether he's rich and poor, is able to do that and bring that forth. Lastly, I'll take another minute. This national strategy financial inclusion document does really look at framework, but I wanted to only show not this chart, but the other one, which they have actually looked upon is the financial inclusion. What is causing this financial inclusion has been the crux. And for the last 3-4 years, in fact, in particular, they've actually looked at these and tried to surface. That's what the government has been doing. This is their document, which is from the Reserve Bank of India, which lacks a supply of income is there, non-suitable customer requirements are there, lacks of requisite documentation, which is there. So they're making these processes easy. When you want to come to a fintech platform, the documentation with the Aadhaar card, the security, like the social security number in the United States.
I think we lost Aman, sir. We'll wait a few minutes for him to come back.
I will check.
I'm sorry, I had a power breakdown and my Wi-Fi went out. So I'll just take, as I said, I'll take another 2 or 3 minutes before I wind up for now. So these are some of the critical factors, because, you know, it is, one can always look at policy frameworks, look at, okay, we want to do this, we want to do this. Don't talk about negativity. What is we are missing? And I think this government has talked about that, trying to look at frameworks. What is that we are missing and how do we go about reducing that framework? And this chart does help in terms of creating that framework which it looks at. So, so in my opinion, the financial inclusion policy framework is critical and is being addressed well by this government. G20 summit, I think I would like to only say 3 points here. You know, this one earth, one family, one future, we've heard that from Vasudhaiva Kutumbakam for such a long time. But more than that, the important framework which comes in here is that the human-centric approach has been targeted. In any activity which has been done, it has been human-centric in nature. Inclusive development has been talked about, whether it's being ambitious or decisive or action-oriented. And the fact that we are again relooking the Gandhiji's mission and principles of serving the underprivileged and the last person in the queue is critical. Whether we are trying to create these fast trains or whether we are trying to create networks or 5Gs or whatever, it is critical that the last person on this, the land, the person living on the border states of this country, the borderline, is able to access that. And I think that's where the human-centric approach is critical. We have seen that happen in the vaccination drive in this country. We have seen that happen in the Jan Dhan Yojana account framework. We've seen that happen in the rural development in terms of creating housing framework, which could be monitored live at the ministry frame platform and others. So all these do build upon that inclusiveness and that financial inclusion platform. And now with the Reserve Bank of India creating the digital rupee based on what we had suggested way back in 2014-15 and the CDBDC framework, not wanting to mine the currency, but creating just a digital currency is critical and all. In my opinion, we have the wings for India at 100. We need to flutter the ram up, and the government is wanting to move forward, keeping that sustainable development goals with the budget, the transparency and accountability in place. The wings to economic growth and development, despite COVID-19, with the digital revolution, both in all segments like agriculture, healthcare, education, and jobs, is fostering that. Today, I have the pleasure, although I could meet Mukul even before personally, almost every year. Either I was in Singapore or he was in India, because he would travel more in India, given that the government would seek his advice on a regular basis, you know, for pension and other framework. But then today also, now with the conferences I hold, the frameworks he is putting forward, I am able to connect with him more conveniently, exchange ideas and thoughts, without that extensive cost which was involved in terms of going overseas and delivering the work. So in my opinion, it is that framework which is helping that financial framework up. focus on these macroeconomic levels and growth and microeconomic level, inclusive welfare, the Bharat of tomorrow will induce employment, financial development, ease of inflationary pressures as well. In my opinion, India's GDP growth has the potential to go to 9.2%, 19 and even higher, but then we need to keep the fiscal deficit under control, which the government has been doing. And we need to focus on all these proposals for employment, incomes of the agriculture's production capacity, where now the GEM network is facilitating that framework as well. Given that the vision for the economy is the jobs and growth and productivity, which has been there for all, in my opinion, India has never been looking at the top echelon power. It has always looked at moving ahead. Re-emergence of the multipolar world is there, and the Buddha's path is important. Lastly, the trust, confidence, in my opinion, holds the key to growth and prosperity. And I could see that voiced by Pradhan Mantri Modi ji this time in G20, time and again, when he talked about trust and confidence. I'm happy because we have been talking about this as a key factor of any relationship, whether it is a husband-wife relationship, student-teacher relationship, the participants here and the people who are delivering the inputs, their relationship. If you do not have that trust and confidence, it will not take life forward ahead. Now, I'll skip this segment and I will close the talk for today. I'll be open to question and answers. Thank you.
Thank you so much, sir, for such an informative session. I would now invite Mukul sir to give his views before we move on to the Q&A session.
Just Aman's presentation is a very good example for the participants as to how to combine and draw insights from theoretical and analytical framework, other literature to analyze a public policy, in this case, financial inclusion. So this was, Aman, thank you very much, because this is something that is such a novel way and a masterful, only somebody who has a total control of the subject can put forward something like that. We are running out of time, so we may have time for only one or two questions.
Sure, sir. I'll just read one question out. It's by Rahul ji. It says, "Good evening, sir. How can we address the problem of jobless growth in India as rising GDP rates have not improved the employment levels as it should have?"
Yes, first of all, the most important component in this is that you should stop thinking about jobless growth. This concept of jobless growth is, in my opinion, not a right way to go about thinking. No growth, in my opinion, can be jobless. It's a question of reorientation of jobs. Earlier, there were different kinds of jobs, whether it's a question of mining, whether it's a question of manufacturing, whether it's a question of servicing. As I said today, with the digital empowerment which is taking place, with funds, works which can be done globally, money can be transferred easily, whether we are allowing WhatsApp frameworks to do it, or UPI frameworks, or Bheem frameworks, or Rupiah as a framework to get your money transferred, or SWIFT, or even other platforms. I think today your world is the market, which was not there when I was a young man, or even until about 5 to 10 years back. Young people who passed out till almost 2008, 9, 10 did not have that framework. They could work, but then they will have to wait for those payments to come after law. So getting into that job framework is not. And I would suggest you to read our work on the labor exchange, which was published about 4 or 5 years back. In fact, that work we presented at the IMF World Bank meeting in 2017 as well. And then the Rozgar Exchange in Delhi was created on that, where we said that actually, your time, labor is nothing else but your time. It's a skill time which is there. And that time has the potential to be, traded on the exchange. So you don't need to work on one place. You can have multiple places of work, and it should be allowed to be traded on exchanges. So people could go about on an exchange, and the employers could come there, the people want to rent, and then automatic, certification and the regulation of the degrees will take place. It's a very market-oriented framework where we're looking at labor, full employment frameworks getting created through market mechanisms like we see in stock markets, exactly the same way. Arvind Kejriwal did launch the Rozgar Exchange. On the other hand, we saw the UP government talk about it in the framework, changing the earlier base the Rozgar exchanges to the way we have proposed. But so far, we have not seen that happen because this concept of commercializing the framework is not there. So again, as I'm saying, GDP growth is taking place. It is your perspective of looking at the growth. One has to work hard. It's not going to be easy because now your competition is not with your next door neighbor, is not with your next door person sitting in the class. It is not with the next company or the zone company which you're working in. Today, your competition, as we can see on platforms like Amazon, Flipkart, and others, is with anyone and everyone across the globe who can be selling the same product and services for a cheaper rate. And so your competition level goes up. So you have to work fine and smart and not think of it as a jobless.
Thank you so much, sir, for that answer. In view of the time, I would put an end to the discussion here. Thank you so much for your time and the informative session.
If I can take a minute, Mukul, just to respond to these two questions which are there.
Of course, Aman.
Yeah, thank you. For Mukul, I have all time. He can take whenever he wants, he can plug me in and plug me off, no problem at all. Because even if he plugs me off, I'll remain the same as I am with him, always. So this second question is, sir, what do fintech solutions like P2P leading means for financial inclusion in India? What is your take on micro-subsidized loans given out on street vendors or the Vishwakarma artisans? You see, in my opinion, one has to service the loan, which is very critical, whether it's through a fintech or a bank or financial institutions. We have seen in this country in the past, specifically in agriculture, and I've been talking about it, 5.5 lakh crore till 2016-17 was waived off every year by the government for a span from 2003 or 4 onwards till almost 2013-14. 5.5 lakh crore were loan waivers only. Then out of this, about 60% of them are agriculture loan waivers. Why? This is used as a tool to go about getting their votes. Now, it cripples the framework. Agriculturist wants the money. He wants right kind of money for his food. He wants water. He wants electricity, not free, but something which he can work with. So in my opinion, if you are taking at a micro level or whether you're looking at fintech solutions or P2P, it's important to service that and change your mindset that, oh, this is coming to me free. It's going to be free because it's from a small company. It's not from the regulator. Oh, I have a free, no documentations are submitted. That mindset in the minds of people needs to change, that a loan is a loan and I need to service it at any cost. It's a dignity. And that's why we saw large number of farmers in this country in the past have been killing themselves because it was their dignity which was disappeared. If their dignity is not there, they cannot coexist in society, whether they live or they die. It is the same thing for them. And this is where, in my opinion, these kind of loans which are given should be very categorically told to them that this is a loan. Many fintech companies even today do not share this very basic information when they actually convert their payouts in terms of EMIs or others. And that's where people get into the problem of what to do and what not to do. So in my opinion, all these subsidized loans are critical. It's important. And fortunately, microfinancing, which Bangladesh got the credit for, had been there in this country because it was a role model tested by the World Bank. And, the Nobel Prize certainly gone there. But otherwise, it is functional in this country, whether it is through the CHIT, the CHIT framework, this committee framework which people operate in. It's like a localized and not bad. In fact, when the 2007-8 crisis took place, most banks came forward, said we will put in $10 billion each, create 100 billion resource, and then banks and financial institutions in the United States, Canada, and other could take money from there. The same way, committees which function in India at a local level, at a small level. So the framework is not bad. The intentions are to be good. And I think those loans as micro-subsidized loans function and they are delivered. So in my opinion, the concept is fine. It's just that the people need to be very well aware that we need to deliver and get it up with. Thank you. Thank you, Mukul.
Thank you. Thank you, Aman. Thank you.
Thank you so
Great
much.
to see you.
Thank you so much. Next, I would like to invite Professor M. Govinda Rao, distinguished economist, former member of 14th Finance Commission, and the Economic Advisory Council to the Prime Minister, former director of the National Institute of Public Finance and Policy, NIPFP, New Delhi, and Institute for Social and Economic Change, ISEC, Bangalore. Sir is here to discuss reforming India's personal and corporate income tax. So over to you, sir.
Thank you. Hope I am audible.
Yes, you are.
Yeah, okay.
Good evening, friends. I'm 15 minutes late. It's not because of any of my mistakes. I have been logged on. I have logged on at 7:15 anyway. To that extent, maybe I will cut down my presentation.
Govind,
Look, Mukul,
Govind,
we all have
minutes.
some our jobs. We all have our engagements. Okay.
Oh, sorry.
But anyway, the point is, let me share my screen to begin with.
We can see the screen, sir. Yeah, you can go full screen.
I'm
So
unable to.
Home, insert, draw, design, transition, animation, slideshow. At the top, file, home, insert, draw. At the left top, there is file, home, insert. Then there is slideshow. Yeah, come to slideshow, design, transition, animation.
Where is out of that in home?
No, then go more further right. Yeah, further right. You can see slideshow. Little bit more. Yeah, after design, transition, animation, slideshow. Yes, from beginning. Yes. Perfect, sir. Please go ahead.
Thank you. Well, I am going to be talking about very briefly about individual and corporate income tax in the next half an hour or so. So what I intend to do is, after a brief introduction, I will start with the proposition, basically ask a question: what makes a good tax system? Then I will briefly talk about the evolution of Indian income tax, both personal income tax and corporation income tax, and then show that Indian tax revenue have been by and large, particularly on the income tax, after 2007-8, have been by and large static. And I will talk about the recent reforms and conclude. Taxes matter, but they entail disincentives. It was Lord Keynes who said, practical men who believe themselves to be quite exempt from any intellectual influences are usually slaves of some defined economist. I am sure the power of the vested interest is vastly exaggerated compared with the gradual encroachment of ideas. Sooner or late, it is ideas, not vested interests, which are dangerous for good or evil. Quite in contrast to that, Johnson and Miles, while reviewing the Merlis report, says that in real world, proposals for tax reform are constrained by politics. This is quite contrary to what Lord Keynes said. Those who lose from tax reforms tend to be vengeful, while those who gain from them tend to be ungrateful. This can lead to tax policy, perhaps more than any other policy, to a tyranny of status quo. There has been a lot of work on the optimal tax theory. I will not go into the details of that for want of time. But the major focus of optimal tax theories, both optimal direct taxes and optimal indirect taxes, is to focus on distortions and then see taxes involve distortions. And obviously, how do you minimize the distortions? By designing the tax system. That has been the focus of the optimal tax theory. And of course, one of the major ways in which you move, you minimize distortions is to move towards uniformity and simplicity. There is much less consensus today on Hayek-Simon's comprehensive income tax, and particularly because people consider that the capital taxation is not very desirable. There have been In fact, Alan Orbach and a couple of others in recent times even have gone to the extent of stating that taxes on capital should be differentiated from the taxes on labor. And in fact, way back in 1956, Arnold Harberger, in a seminal paper, said, in a small open economy, taxes on capital might turn out to be a tax on labor. Obviously, it's an open economy and people can move and the capital can move much faster. So there was a time when steep progressivity in the tax system was a fashion. Even in the US and UK, way back in the 1950s, you had marginal tax rate of 90%. In India, even if you look at the mid-80s, I mean, in fact, before the reforms, this thing, you had a situation where marginal income tax rate was 85%. On top of it, you had 15% surcharge on 85%, which basically ended up 97.75%. So obviously that is no longer a fashion. So there are problems with the application of optimal tax theory. For want of time, again, I'm not going to go through, because particularly in optimal indirect taxes, what you will see, if you want to design the tax system, you need to really reduce, when you levy the tax, the demand for that commodity gets reduced, and an optimal tax is the one where the reduction in the demand is proportionate. That would mean that you have to design the tax according to the price elasticity of demand. Those items which are highly elastic should be taxed at a lower rate, and those items which are not very elastic should be taxed at a higher rate. And those items which are price inelastic are also inelastic, are also income inelastic, which means that you might end up with taxing poor person more than the rich person. And obviously you need a huge amount of data to calculate the elasticities, price elasticities. And therefore, and then of course, when you have multiple taxes, rates of tax, there will be a lot of political, there will be a lot of political arguments, and in fact, politics seeps in. So the best practice approach to tax reform is to minimize three costs. The three costs associated with the tax are taxes on collection, the compliance cost, and tax cost in terms of the distortion to the economy. Taxes on collection is basically the administrative cost. Compliance cost is the tax which is borne by the taxpayer, who has to go to an auditor, an accountant, and if necessary has to pay a bribe if there is a tax. The taxes are complicated, and various other taxes. The costs that he bears are the compliance costs, and the distortions are all the taxes. Involve distortions, and obviously the relative prices changes will have to be minimized. And therefore, a good tax system is the one where you minimize these three costs, which basically means you broaden the base, reduce the rate, reduce rate differences, and have a simple and transparent tax system. One of the major problems with most countries is that they have multiple objectives loaded into the tax system. Obviously, and the moment you have too many objectives loaded into the tax system, then it becomes complicated. So avoid multiple objectives and evolve a simple tax system. Tax policy can make very little impact on changing income distribution. In fact, Beckman and Luckner did a series of studies in the United States and came to the conclusion that the tax system in the United States is not progressive. There was a very detailed study in Chile, which showed that the tax system is regressive. The reason is very simple. In India, for example, even though you have something like 6 crore people filing the income tax return, the actual tax is paid by just about 2.5 crores. Now, which basically means somewhere about, something like 2% of the population. So any changes that you want to really do is with regard to this 2% of population. And obviously, how much of change you can make in the income distribution if you really are basically focusing on 2% of population. On the other hand, there is also another side to it. how, is reducing the inequality more important than reducing poverty? If poverty is, obviously you can reduce inequality, but poverty can increase. If income of the rich as well as the income of the poor, if income of the rich as well as the income of the poor increases, and income of the rich man increases more than that of the poor, inequality increases. But income of the poor has increased. Similarly, if the income of the rich and income of the poor has fallen, and income of the poor has fallen much more, more, then obviously poor man doesn't really have much of an income to spare. And obviously, even though your Gini coefficient, the inequality has improved in that situation, the problem of the poor man is not solved. And that is the reason why the focus will have to be on the poverty elevation rather than income distribution. If poverty elevation is the focus, tax is not an instrument. Instrument for correcting things would be the expenditure side of the budget. And undue focus through taxes to change the income distribution, only creates more problems. So obviously you need to shift the entire focus on the poverty elevation, which means the expenditure side of the budget. I'm not saying for a moment that you should have a regressive tax, but then too much of a focus on progressive taxation and having very high marginal tax rate would reduce the incentive to work, save, and invest. Other important issue of a good tax system is that it should have a responsive tax administration. It is integral to reform. Trust the taxpayer, have a good information system and technology, and effective and friendly taxpayer service. These are the critical elements that is important. Milka Casanegra, the expert in tax administration in IMF, she is retired now. She used to say, in developing countries, tax administration is tax policy, which basically implies that, that we should give sufficient focus on tax administration and not intrusive administration, but administration to see that the tax is levied and implemented in a fair manner. So, okay, in a multi-level government like India, you also need to coordinate the tax reforms of different levels of government. Now, we had a long history of tax reforms. You had Tax Reforms Committee in 1953. In fact, after all this, and then you had the Calder's Committee on Expenditure Tax. After all this, in 1961, they had the tax code passed, and in fact, Income Tax Act was passed in 1961. Subsequently, several changes have been made, and the tax system has become very, very complicated in that times. There was the Direct Taxes Inquiry Committee in 1971, which basically said that you should reduce the marginal tax rate, but then we continued to have a very high tax rate. And then obviously, in the case of corporation income tax, what happened is that when you have when you try to do too many objectives, and when these objectives, basically sort of that makes the system much more complicated because you introduce several tax concessions, exemptions, and preferences in the tax code. Then there were companies which were not paying taxes at all. So you had these zero tax companies. At that time, they brought an additional listing in 1988 that minimum alternative tax they started levying. And so it was withdrawn earlier and then again reintroduced in 1996. One of the major things that happened was the Tax Reform Committee in 1991. Dr. Raja Chelaya was the chairman of the Tax Reform Committee. And one of the major things that he did, there were something like 12 tax rates at that time. Income tax rates were, personal income tax rates, there were 12 tax rates. And then, of course, marginal tax rates were very high, as I mentioned earlier. So one of the things that he did is he brought down the number of tax rates into 4 in addition to exemption, and then brought down the marginal tax rate to 40%. Then, of course, there was a Kelka's task. In fact, 1996 was a watershed year. That is a year then they had a very major tax reform in the personal income tax, where they said there will only be 3 tax rates, 10%, 20%, and 30%, and substantially brought down the rate. And obviously, like what they call the Laffer curve, where if you reduce the tax rate, the revenue increases. The tax revenue did show up an increase in the next few years. And so you had the Kelka's task force report on direct and indirect taxes in 2002. And in 2005, 2006, there was an attempt at changing the tax code. In fact, Mr. Chidambaram was the finance minister. They wanted to have a tax code getting rid of all the tax exemptions and concessions and reduce the tax rates. In fact, the draft was ready, but then what happened was Chidambaram was shifted to Home Ministry, and Pranab Mukherjee came in, and then this particular draft was circulated to the people for comments, and most of the people commented saying that it's very good to get rid of the exemptions and concessions, but not in my sector, in other sectors. So in the process, what happened was that nothing, this thing, and the draft code continued to be ignored. Nothing happened thereafter. And of course, the new government came in 2014, and subsequently there were only, in fact, the entire report has been, buried. As I said, one of the important things that people don't realize that happened, that shows the importance of technology, is that that tax information network that was introduced in 2004. There was a report of the Controller and Auditor General in 2003, which basically said those employers and those other contractors who were supposed to detect the tax at source and file the return, detected the tax at source, but did not pay the money to the government. They kept it for themselves. So that's because the information system was bad. It's in this context that Dr. Kelkar, who was advisor to the finance minister then, asked the National Security Depository Limited, NSDL, to undertake this particular task of creating a tax information network. And basically, they asked every one of these taxpayers to send the tax deduction, send CD with the information on the entire information on the tax deductible and the payment that they have made to the bank, and checked with the bank. And they actually covered city by city. By 2007-8, they had covered the whole country. And if you can see the income tax revenue between 2003 and 2004 and 2008, income tax revenue grew at the compound rate of growth of somewhere about 32% per year. And as a tax GDP ratio, the increase was almost 2 percentage points. And that was one of the important things. Basically tells you how important a good information system and a good technology can do to a tax reform. So you have, in the case of personal income tax, as I mentioned, in 1973-74, there were 11 rates of tax, from 10% to 85% and 15% surcharge at the margin. With people with more than 2 lakhs of rupees, we are supposed to ultimately pay something like 97.5% tax. There was a major reform in 1985-86, reducing the number of tax rates from 8 to 4. Reduction in the marginal rate from 60 to 50%, and of course, evolution of a wealth tax, and reforms in 91-92 actually brought down the marginal tax rate to 40, and in 96-97 to 30. So 96-97, you had 10%, 20%, and 30%, and a cess of 4%. And as I mentioned, there was a discussion paper on the direct taxes code, but nothing has happened. So present system, you have the exemption limit, for those people, so those young people, not for people like me. Exemption limit is 2.5 lakh. Above 60 years, it is 3 lakhs. And then, you have a tax system where you have, 5%, 20%, 30%, and surcharge of 10% on income about 50 lakhs and 4%, Now, but the new government has introduced an alternative rate structure. And the alternative rate structure is that if you do not take any exemptions and concessions, one of the major problems with our tax system is that our tax system is considered to be a Kamadhenu. It has to perform several tasks. There are several objectives posted into it. It has to help savings in certain instruments. It has to encourage small-scale industries. It has to encourage special economic zones. It has to encourage infrastructure industries. So you have loaded the tax system with several objectives, which create a huge number of giveaways. And of course, there is also a major issue that agricultural income cannot be taxed because the Constitution says Government of India can tax only non-agricultural income, and the states are unwilling to tax agriculture because that has been assigned to them. So in the new tax structure, you have the incentives on savings, incentives on insurance, incentives that are available on house rent deductions, and all these are if you get rid of all these, you have 7 rates. So up to 2.5 it is exempt. I mean, you can see the number of rates there. You have 7 rate of tax. This is an alternative to the earlier sort of that I mentioned. Now I have 2 problems with this type of thing. One is, I don't think taxes should perform several duties. Taxes are meant to raise revenue and just confine it to raising revenue. Too many loading too many objectives into tax policy results in creation of avenues for evasion and avoidance of the tax. And obviously, those objectives will not be achieved in any case. Now, but then if you really want to have an alternative, I mean, it is not an alternative. You should not really have an alternative. You should get rid of all these exemptions and have a simple 3 rate structure. In fact, there are countries which have moved into single rate structure. And if you, even when in the new government, even if you want to have, they want to get rid of the exemptions and concessions, all right. But then why do you want to have 7 rate of tax? Why can't you simplify that? And again, this preoccupation with your equity is the one which is really creating this trouble. And that only creates much more complicated structure. And obviously, most people will have to go to the accountant, and the compliance cost goes up, administrative cost goes up. Now, there have been a lot of reforms in the corporate taxes. There was, in the case of companies, there was a distinction between closely held companies and widely held companies. This was done away with. Tax rates were unified at 40% in 1993-94. In 97-98, the corporate tax was further reduced to 35%, and the tax on dividends was shifted from individuals to companies. So dividend tax rate was in fact on this dividend tax we have been doing on both sides. Sometimes we tax the dividend the companies, sometimes we tax the dividends in the hands of the dividend recipient. Dividend tax rate was increased to 20% in 2000-2001, then reduced to 10% in 2001-2, and levied on shareholders rather than companies. So the policy was reversed once again in 2003-4 with the dividend tax imposed on the company. In 2015-16, the finance minister promised to reduce the tax preferences in the budget. and she promised to reduce the tax preferences and exemptions progressively and reduce the corporation tax to 25% in the next 3 years. Dividend distribution tax was repealed in 2020-21, and dividend is being now taxed in the hands of the dividend recipient. Taxation on new companies was reduced to 15% in 2019-20s, and 115 BAA was inserted into the tax code, which states that the domestic companies have the option to pay the rate, plus surcharge up to 10% and cess of 4%. The effective tax rate at basically works out to 25.17% from the assessment year 2020-21 onwards. They should not, if they do not avail tax exemption preferences. The point is, now why do you want to give this option? Why don't you simply remove those? And you can't, it doesn't really make, and then why don't you just simplify the tax system? And that's, so, and on the one hand you do that, on the other you go about, on the other hand you go about saying that I am also reducing the minimum alternative tax. If you are saying that people should not take tax exemption and preferences, why do you want to reduce the MAT? I mean, it's, it looks very, in that sense, contradictory. What ails our tax system? What is the problem? Stagnancy in overall, in the tax GDP ratio in our country is about 16.55% to 17% of GDP. And in that income tax comes somewhere about, somewhere about 6 to 7%. Now, one is, as I mentioned, agricultural income tax cannot be levied, and the help is not for the agriculturists. In fact, every big businessman has a farmhouse. Oh, because it becomes convenient tool for evading and avoiding the tax. And then, as I mentioned, there are multiple objectives in the tax policy, a plethora of exemptions and deductions. You have taxes to incentivize savings in particular instrument, not savings in general. Promoting exports, achieving balanced regional development, promoting investment in infrastructure, expansion of employment, promoting scientific research and development, and encouraging cooperatives and charitable institution activities, encouraging investment through investment elements, accelerated depreciation, special economic zones, so on and so forth. Now, in the process, we have complicated the tax code so much that it provides enough opportunity for people to evade and avoid the tax. Now, say in this particular environment, it's best that you get rid of all that. So, and obviously, tax instrument is not a Kamadhenu. You can't really achieve so many objectives through tax policy, and these are done much better by having sort of through other instruments rather than through tax policy. There is one other major problem. Now, the other major problem is base erosion and profit shifting. Many of the multinationals have their head offices in low tax jurisdiction or tax havens and operate from there, and in fact transfer all the profits to those tax havens and the low tax jurisdictions, and obviously do not pay the tax that actually corresponding to the business they generate in these countries. They declare their profits, but there in the places where the tax rate is low, they declare their profit because the shareholders want them to declare their profits. And that is the reason why G20 asked the OECD countries to work out a scheme, a system of working on this base erosion and profit shifting and trying to find out. And this is even more so in the digital companies. So what has happened is the OECD has been giving certain guidelines, but then the agreement has been eluding. Obviously, we have not been able to come to an agreement. There is one organization called ICRIT, Independent Commission for the Reform of International Taxation, which basically came with the idea that you allocate the profit to different countries according to either the investment or the employment or the turnover, and then ask each of the countries to levy the tax at the rates applicable, so that this pernicious practice is stopped. But then that would require an agreement between the countries, and obviously agreement has been eluding. So base erosion and profit shifting is one of the major this thing. It's not just a problem in India, but it's a problem all over the world. So obviously, finally, when I come to tax administration, as a tax system is complicated, you really require a much cleaner tax administration, much cleaner tax system, and that would require. And then obviously there has to be trust. I mean, you should have the trust in in the people, and now they have tried to sort of bring about technology to see that you can have a faceless tax administration, but that doesn't help, because if there is a real genuine problem, the faceless thing will not help, because the tax notices will continue to be given, and there is no way you can discuss and sort this out. And in fact, if one sees the entire scheme of things, there was a report of the Controller and Auditor General at some point of time on the entire whole question of tax audit. They said something like 69% of the cases which go to the tribunal are decided in favor of the SSCs. 73% of the cases in the high courts are decided in favor of the SSCs, and almost 78% of the cases in the Supreme Court are decided in favor of the SSCs. It basically implies, irrespective of which government exists, it basically implies that the government is the biggest litigant. And obviously the problem starts when they do the budgeting. When they do the budgeting, it is not simple projection. What they do, in order to contain their fiscal deficit in the budget, show the lower fiscal deficit, they exaggerate the tax rate, and then that exaggerated the growth of taxes, and that is given as a target to various collectorates, and obviously collectorates, basically their performance is judged on the basis of to what extent they are able to fulfill the targets. Now what happens is that even when they know that what they are doing wrong, they go about levying assessing the tax at a much higher level. The reason is that there is a law which basically says whatever is the assessment, if you have a dispute, you have to pay 20% of the tax, and then you can go to the tribunal. So he gets his 20% of the tax, you may go to the tribunal, and by that time he would have got his promotion and he would have gone away, and tribunal will decide the matter after a few years, and at that time it will have to refund, and there is a huge amount of refund that has to be given. So obviously, I mentioned about tax administration. So this type of tax, this is the implicit in tax terrorism is in the projection of taxes. Thankfully, in the last 3 years, tax projections have been much more realistic, and just as their fiscal deficit targets have been much more realistic. And so in that sense of the term, I think that's becoming that, hopefully that will that sort of thing will not happen any longer. Now you will see that I mentioned the tax GDP ratio. If you see now, you will have somewhere about 5.8%, 5.7, 5.8% coming from direct taxes. That means at the center, and then obviously at the local, at the state level, the only direct taxes, if you want to call it, is the tax on transaction of property, that is stamp duties and registration fees, and then obviously there is no agricultural income tax. So, and then at the local level, property tax, less said the better. The total revenue from property tax comes to somewhere about 0.2% of GDP. So there has been, and you see here the point that I mentioned. In 2001-2, you had the total direct taxes of 2.9%, and that became, by 2007-8, it became 6.1%. That's mainly because of the tax information network, which I alluded to earlier. Anyway, this is a... So as I said, there is optional tax system now. Tax exemption limit has been increased. Now they say that in the new tax system, you can get rebates up to 7 lakhs of rupees. Tax deductions and deductions are disallowed, concessions are disallowed. Rates have been brought down for incomes up to rupees 15 lakhs. Of course, beyond 15 lakhs, it's... But then, as I said, there are 7 different tax rates in the new system. In the case of corporation tax, which was introduced in, options were introduced in 2019, reduced tax rate on domestic companies. They need to forgo exemptions, incentives, depreciation allowance, and investment allowance not allowed. Tax rate reduced to 22% and the surcharge of 10% on that, plus 4% cess, which pays, effective rate comes to 25.16%. Marginal, minimum alternative rate was, reduced from 18.5% to 15%. New manufacturing companies, taxes are levied at 15%. On top of it, surcharge of 10% and cess of 4%. If you do not opt, obviously, opt for this particular thing, obviously the companies are required to pay 30% and surcharge of 10% and 4% cess, which works out to 34.32%. But then they will avail various other exemptions. So tax system has undergone significant changes over time. But this is the time where you need to really throw out your Income Tax Act of 1961 and work a new and a simple tax. And Amrit Kaal is the right time to do that. After all, before, sort of from, if you really want the 9% growth that was talked about earlier, if you really want that sort of a growth, you need to really have sufficient incentives left to the market. Government has to basically decide what its role is. Is it its role to run the hotels? Is it its role to run the telecom companies? It has to is it its role to compete with the market? Or is it its role to promote the market? And obviously, competitiveness doesn't come by increasing the tariffs. Competitiveness doesn't come by saying that I am going to ban, I'm going to license the computers imports and then have a PLI, production linked incentives in the system. We have seen this happening in the past, and we have seen what sort of thing that happened. And my good friend Arvind Panagadia, always, in fact, he's one of the great supporters of this regime. But at the same time, he's very unhappy that the tariff rates have been increasing, since 2017, and we'll have to bring that down. But anyway, that's another issue. I do not want to get into that. Taxation of multinationals and digital taxation will continue to be major challenges. There is always a race between the tax collector and well-funded taxpayers. Providing options is not a solution. The government should, have a new code where they should get rid of all these exemptions and concessions and have a low rate. Broaden the base. It is called BBLR approach. Broad-based low rate approach. My good friend Richard Bird always used to say, this is the approach that most countries should follow. Broaden the base, lower the rate, have a less differentiated rates, and have a simple and transparent tax system. Application of technology is very critical. It has been shown, and one of the things that has happened is that the GST number has been, in fact, income PAN number has been reseeded into the GST number. As a result, there is a very good check against GST and personal income tax. A person with a large turnover, they can always see, in fact, through artificial intelligence, they can check, they can identify those cases where the turnovers are large, but at the same time, the income taxes are not really paid, and then obviously focus on those. And focus on the whales rather than minnows. Small fellows don't really, don't give you much of the money. It's the big fellows that give the money. And taxpayer service is extremely important. And in developing country, as Milka Casadegra, her dictum says, tax administration is tax policy. Thank you.
Thank you so much, sir, for sharing your valuable insights with us today, and our sincere apologies for the delay. Would you, if possible, would you be open to taking any questions, please?
Yeah, you can, some questions you can take.
Sure, sir. So before that, Mukul, sir, would you like to add, would you like to give your view?
Let's go to the questions.
Shreya ji, do you, you can unmute yourself and ask your question. Or if anyone has any questions, feel free to raise your hands. We'll promote you to panelists. And Shreya ji, not here. So, seeing none, so from my end, I would ask, as I'm a graduate in economics, any tips that you would like to give for from your experience for someone like me who's just about to enter the policy arena?
Well, I mean, as I said, you see, my lifetime has been spent in working on public finance.
Right.
And in fact, I wrote a book last year, and that the name of the book is Studies in Indian Public Finance.
Right.
And that basically starts with the role of the state. And I, strangely, I find that government is, or state is doing lots of things which it should not be doing, which should allow the market to do.
Right.
And the government should come in only when the markets fail. And market failure, again, even in the market failure, there are several areas where the government's role is only regulation and not provision of public services. So, and if you do that, then obviously the focus will be much more, and government becomes a promoter of the private sector.
Right.
Regulator of the private sector for efficient competition rather than competing with that. That's the basic thing that public policy people have to do. In public policy, some of them, as an economist, I would say the following. There is always, in any public policy that one promulgates, you should always say that there is something called an opportunity cost. What is that opportunity cost? Then you also should see there is a counterfactual. What is the counterfactual to this particular thing? Is the counterfactual better than this particular thing? See, these questions on opportunity cost and counterfactuals are critical. Then obviously, you need to really make, there are easy policies that can, sort of reform that you can do. There are difficult ones. The easy ones you can do first, and the difficult ones you can basically go about, basically you need to work on that and do it. But if you get the basics wrong, then it becomes extremely difficult. In fact, my good friend Richard Bird, who passed away last year, some 3 months before his passing away, we had some exchanges. And he asked me a question, Govinda, why is it that, you see, the world over you have GST? Why is it that you guys, screw up everything that you guys do? What is the problem? No, I have no answer to this, because there are too many things in the policymakers' head, rather than trying to fix, what the main objective is and then proceed. It is Jan Timbergen, he said that you should have one instrument for one policy. Okay, now the point is, we want to load every policy with the too many objectives. So the basic thing is, you need to look at the opportunity cost of doing that. You need to look at the counterfactuals, whether you can do, some other policy, is there anything better? Whether, and obviously examine whom does it impact more? Who are the people who get impacted by the policy? So these are the people, these are some of the issues that you have to keep in mind. So this book that I'm talking about basically starts with the role of the state. Then I go into the public expenditures, basically the efficiency issues. Then I go into tax policy and reforms. And in fact, much of what I said today is there in the report. In fact, in 2005, I wrote a paper on this. 2015, I wrote a paper on this, and then of course, I mean, there have been quite a few others, and then. So that's then I go into there is a separate chapter on goods and services tax, and in fact, Madras School of Economics has in their working paper series, this particular paper is there. Those who are interested in looking at what is the second generation reforms that you need to have in GST, one could look at. Then you have the macroeconomics of public finance, deficits and debt. Then I go into the questions of intergovernmental finance, basically fiscal federalism and intergovernmental transfers, and conclude the book with the public finance in pandemic times. So, I mean, there are quite a lot of things that are there in the book, but basic thing, anybody who is working on public policy should understand that there is something called an opportunity cost in anything that you do, and obviously you need to look at the counterfactuals before you embark on anything.
Right. Thank you, sir. I'll surely make note of that book and I'll definitely give it a read. We have another question. It says, it's from Ashish Ji. It says, the tax administration has undergone several changes like limited assessment of cases, etc. What further areas of tax administration need reforms in case of direct taxes? And do we look at an era of indirect taxation, or will it be a mix of both?
No, in fact, in the near future, you'll have to basically look at both direct and indirect taxes. There is no question of, focusing on one. But then I would expect that if the second generation reforms are done in GST, that could become a money machine as we go along, as it happened in many other countries. As far as the tax administration is concerned, there is a 4-volume document produced on tax administration committee headed by Partha Shom in the Ministry of Finance. The basic thing that they have to do is to make the tax administration independent. It's independent of the government. It has to, because it has to have, it has just to focus on this thing. And then the other important thing is, you may do small little things here, but you need to have some fundamental this thing. You take case of GST. There is an embargo on sharing data with the researchers. Why? Because somebody made some comment, some criticism on the GST at certain point of time. The Revenue Secretary, who is the Secretary of the GST Council in the Government of India, simply said that I declare that now on no data should be shared. You don't kill a messenger. In fact, there has to be a system. And who decides the tax rate? The tax rates are determined by what is called the Fitment Committee. And Fitment Committee consists of the Joint Secretaries in the Ministry of Finance, in the Central Board of Indirect Taxes and Customs, and some commissions from different states. Now, these guys don't understand. You need to have a research cell there, which basically says what is the general equilibrium effect of a tax. Say, for example, you take the case of construction industry. Cement, steel, all building materials are taxed at 28%. Why? They added the sales tax and the excise duty and found that it is closer to 28% and then put in there. But that's a labor-intensive activity. Construction is a labor-intensive activity. No, obviously, the economics has not gone into the determination of taxes. So there's a much more, detailed this thing. They should have a cell where you have an accountant, you have an economist, you have a public administration man, a tax administration man, and you have a lawyer. All of them will have to be, constitute a thing. This is not a small country. It's a very large country, and GST is a large reform. And but then we still continue with what is called the Fitment Committee. So there are lots of things that need to be done. There is a 4-volume report that was produced by Partha Shom, and I wish somebody takes it up, dusts it, and looks at what is said there.
Right. Thank you, sir. We'll take one last question. Shreyaji asks, can people ever look at taxation without a pinch of salt? And why does one section always feel slightly targeted by the government when it comes to taxation?
No, I am always, you see, if you want to have, on the pension issues, Mukul will, give much more detailed explanation. I don't want to say. The job of the tax policy is to raise revenue. Focus on it. And, we have moved from, defined benefit scheme to, contributing system in the case of pension. Now there is a lot of focus saying that some of the states are basically saying that they will go back to it, which doesn't immediately affect you, but then it is going to be a long-term, sort of a problem for the country. So obviously, objective of tax is to raise revenue in the best possible manner by minimizing the distortion, minimizing the three costs: cost of collection, the compliance cost in terms of distortions in the economy.
Right. Thank you so much, sir,
I would
for
just like
your
to add
time.
one or two lines here to what Professor Rao has said.
Right, sir.
If Professor Rao allows me to do so, just one thing that you see, anyone wants to take your hard-earned money, whether it's your wife or your son or your father, you always have a pinch in it because you've hard-earned. Unless you want to give it out to them your own willingnessly, you would always feel that pinch. We have seen economies which have had zero taxation, including Singapore when it began its journey. But then, they ultimately had to come out with tax frameworks when people start getting richer. And that is certainly going to be there. And whoever feels the pinch always feels I am the one who is targeted, even in a personal discussion at home. So it's not something which we always get to see. If you look at the budget and when they always waited for the taxation framework, which has not been tweeted in the last 2-3 years so much as it used to be tweaked every year in the previous budgets till almost 2013 or 14. Every person used to wait and watch for the last 15 minutes where the Prime Minister will come, Finance Minister will come out and say, oh, what is the new tax for the next year? And that was where it used to be pinching because you always felt, oh, now I'm going to pay more or going to pay less. I think it's a question of, again, mindset where people start thinking that if I don't pay, who will bear the cost of these responsibilities of giving public transportation, public health? If you really look at a country like United States or even Europe, 70 to 75% is what the tax framework is, both central and federal included together, varying from state to state. In the United States goes to, Mukul would be more precise, but maybe between 55 to almost about 70, 75. In Europe, it is about 70 to 75 country to country. Now, if you're willing to pay that kind of a tax, then certainly you'll get free healthcare, free schooling, free college, free everything. But otherwise, it is difficult for a government to provide, as Professor Roy has been mentioning about that they need to raise revenue. So it's a question of one's mindset to change that if I've earned money, I must be willing to pay some tax on that money which I've earned. It will not pinch. If you don't, then it will pinch.
Right. Thank you, sir, for your words as well. Mukul, sir, would you like to add anything, your closing remarks?
I think after Professor Govinda Rao's authoritative presentation and his vast academic and policy research experience, there is nothing more to say. I think the participant should take the main messages seriously. There is a whole history of the attempts at tax reform. So what emerges is that the tax reform is not an event, but a process. Its work is never done. You have to keep on building consensus, work at it, find opportunities where reforms can occur in a positive way. And so the complexity of designing tax system for a diverse, large economy with relatively low per capita income is very well illustrated by Professor Rao's presentation. And I hope you can we can circulate you can circulate this to the participants.
Yes.
Thank you. Thank you very much.
Thank you, sir. We
It's good
surely
to see you. Good to see you, Professor Rao.
Good to see you, Mukul bhai.
Yes, sir. We surely learned a lot. I think I speak for all the participants.
This is the 4th lecture I am giving today.
Wow.
Oh,
That's a lot.
And that is the reason why I'm time constrained.
right.
And, sort of people don't consider that their spillovers affect others.
We apologize for that, sir, today, but we are very honored.
That doesn't help, does it?
Sorry, apologies, sir. Thank you so much, sir. We're very grateful and honored to have you amongst us today. So with that, we come to an end of day 6 of a 1-month immersive online intermediate certificate training course on contours of public policy in India in the Amrit Kaal. I, Tripta Behra, researcher at IMPRI, Impact and Policy Research Institute, would like to propose the formal vote of thanks on behalf of IMPRI, Center for the Study of Finance and Economics, CSFE, New Delhi. We are very grateful to our experts for day 6 of this course, Ms. Urvashi Prasad, Professor Aman Agarwal, and Professor M. Govinda Rao, for taking out their valuable time and giving an opportunity to the participants to learn from this online certificate program. We thank all of our participants who have raised pertinent questions and actively participated in today's deliberation. We look forward to welcoming you next week, 22nd September at 6 p.m. for the 6th day of this certification course by distinguished experts, Dr. Soumyadeep Chattopadhyay, Ambassador Bhaskar Balakrishnan, and Professor Mukul Ashar. We are grateful if you are watching us later on YouTube or listening to us on our various podcasts or reading our publications. We hope you join in. We hope you continue to join in the future to our IMPRI Web Policy Talk and Web Policy Learning. Wishing you all a very good evening. Thank you. Thank you so much.
Thank you.
Thank you, sir.
Thank you, everyone.